Hi everyone, my name is Busari Abiodun. Welcome to my channel. In this video, I will be continuing on IFRS 11, that is joint arrangement. In the first part of this video, I've explained everything that has to do with IFRS 11, including method of accounting. But this particular video will be the theoretical, a practical part where I will be taking an illustration and I will be providing solution to the question. So under this video, like I said, I will be taking an illustration on joint arrangement, and I will also be looking at account to be prepared when separate set of books are not kept. So like I explained in the previous video, so we'll be looking at preparation of joint ventures account and preparation of co-venturers account. So let's get started. So the illustration we'll be taking is Fadward and Fadnet enter into joint venture, with Fadward acquiring 50% interest in Fadnet, and the decision regarding Fadnet relevant activities require unanimous decision of the both parties. Just like we said before, a partner can be regarded as a joint arrangement, it must require unanimous decision of the parties involved. So let's continue. So the aim of the joint venture is to buy customized product from manufacturing company and sell at different markets. Fadward has invested 3 million naira in the business, with profit or loss from the business is agreed to be shared 1:2 respectively. It was agreed that each party keeps its own transactions, and details of their transactions for the month of January 2023 are given below. So we have purchases. So Fadnet is 25,000 naira, while Fadnet is 22,500 naira. So advertising. So the amount spent on advertising is 1,200 naira by Fadward, while Fadnet spent 800 naira. We have transportation, 3,000 naira by Fadward, 2,400 naira by Fadnet. We have wages and salary, 4,000 naira by Fadward, 3,000 naira by Fadnet. Other expenses by the venturers. So 1,800 naira by Fadward, 1,100 naira by Fadnet. Sales. The sales being made by each of the venturers. We have Fadward for 4,000 naira. We have Fadnet at 7,500 naira. So at the end of the month, the statement between the joint venturers took place, and each venturers received their share from the venture. So you are required to prepare joint venture account as it will appear in the book of Fadward and Fadnet. And the second question is that you have to prepare joint venture account when each venturer keeps only record of his own transaction. So in this particular video, I will be taking a situation whereby each venturer prepared his own record of account. So solution, just like I said, joint venture account as it will appear in the books of Fadward and Fadnet. So like I explained in the previous video, each of the venturers will prepare two accounts, which are joint ventures account and the co-venturers account, that is the account of the other party. Like we said now, Fadward and Fadnet are both in the arrangement. So Fadward is the one preparing the account, which means Fadward is going to prepare joint ventures account, and it will also prepare Fadnet account. So let's get started. So joint ventures account, like I said, so we prepare a T format. So this is a joint venture, so we put the title joint ventures account, and the unit of measurement, this is naira, in this case naira, that's joint ventures account. So at the same time, co-venturers account, who is the co-venturer in this case? It is Fadnet. So we prepare, draw the T account, Fadnet account, and we also put the unit of measurement. So let's go back to the question. So Fadward and Fadnet enter into a joint ventures, with Fadward acquiring 50% interest in Fadnet, and the decision regarding the Fadnet relevant activities require unanimous decision of both parties. So the aim of the joint ventures to buy customized product from manufacturing company and sell at different markets. So Fadward has invested 3 million naira in the business with profit or loss from the business is agreed to be share 1:2 respectively. So Fadward invested 3 million naira in their business. So that 3 million naira will be going into the bank account of the venture. So that's the reason. It has nothing to do with the two accounts we are talking about, because they only focus on joint ventures account and co-ventures account. So let's continue. It was agreed that each party keeps its own transactions, and details of their transactions for the month of January 2023 are given below. Now let's look at the entries. Purchases. Fadward is 25,000 naira. So we go to the joint ventures account. If you remember in the last video when I was explaining about joint ventures account, I said it's like a profit and loss account. This account is prepared to determine the profit or loss made from joint operation, which means all the expenses will be debited to the account, while all the income, closing stock or stock closing inventory, if there is drawing, will be credited to the account. So in this case, Fadward is the one preparing the account. So we have purchases, which is 25,000 naira. Since he is the one preparing the account, so he maintain not proper record of the accounting. So let's look at the Fadnet. Fadnet purchases is 22,500 naira. So that will be treated like a personal account. So we go back to her joint ventures account. So we have Fadnet, that is purchases in brackets. So to know what the entries is made for, which is 22,500 naira. Like we explained in the previous video, this account is prepared based on double entry principle. So with debit joint ventures account, the corresponding credit entry will goes to the Fadnet account. So let's go to the Fadnet account. So that means we credit Fadnet account, that is joint operation in bracket purchases 22,500 naira. That is the treatment for the purchases. So let's go and look at the next item. We have advertising. Fadward 1,200. So we go to the joint ventures account. Advertising 1,200. So for Fadnet, how much is advertising? That is 800 naira. So we go back to the joint ventures account. Then we have Fadnet in bracket advertising 800 naira. Why the corresponding entry goes to the Fadnet account, which is, that is joint operation advertising 800 naira. Next entry, we have transportation. So Fadward is 3,000 naira. So let's go to the joint ventures account. We have our transportation 3,000 naira. Remember, Fadward is the one preparing the account. The corresponding transportation or the corresponding entry for this transportation will have gone to the transportation account in the book of Fadward. So we'll have gone to the transportation account in the book of Fadward. But the account he is preparing now is the one that has to do with both him and the venturer. So that's the reason why the corresponding entry for that one is not revealing. So we are only focusing on the co-partner, which is Fadnet. So how much is Fadnet transportation? So Fadnet transportation is 2,400 naira. We'll go back to the joint ventures account. We have Fadnet transportation 2,400 naira. Why the corresponding credit entry goes to the Fadnet account? Let's go to Fadnet account. Transportation 2,400 naira. Next entry, we have wages and salary 4,000 naira for Fadward. So joint ventures account, we have wages and salaries 4,000 naira. So let's check for Fadnet. Wages and salary is 3,000 naira. So we go back to the joint ventures account. We have Fadnet wages and salary in bracket 3,000 naira. The corresponding credit entry goes to the Fadnet account. So we have in the Fadnet account, so we have joint operation wages and salary 3,000 naira. That is the treatment for that one. Then the next one, we have other expenses. So for Fadward is 1,800 naira. So to our joint ventures account, we have other expenses 1,800 naira. So how much is the other expenses for Fadnet? Let's check it. That's 1,100 naira. So we go back to our joint ventures account. Fadnet other expenses in bracket 1,100 naira. The corresponding credit entry goes to the Fadnet account. So let's open the Fadnet account. So Fadnet account. So we have joint operation bracket other expenses 1,000 100 naira. So then the next entry is sales. So the amount of sales for Fadward is 44,000 naira. Joint ventures account. Remember, this time around, this is sales that will be credited to the joint ventures account. So we have sales 44,000 naira. So for Fadnet, it's 37,500 naira. It's the same thing. Go back to our joint ventures account. We have Fadnet bracket sales 37,500, while the corresponding debit entry goes to the Fadnet account. Let's go to the Fadnet account. So that means we are going to debit the account with joint operation bracket sales 37,500 naira. So if we look at it, there's no any other expenses again, because at the end of the year we are required to prepare to settle each venture. So that's the end of the entry. That means we are going to close the account. Let's go back to our joint ventures account. So let's close the account. After closing the account, let's add all the entries together. At the debit side, if we add all the entries together, 25,000 plus 22,500 plus 1,200 plus 800 plus 3,000 plus 2,400 plus 4,000 plus 3,000 plus 1,800 plus 1,100, everything is going to give us 64,800. That is the total of the amount at the debit side of the joint ventures account. So let's add the entry at the credit side of the joint ventures account. We have 44,000 plus 37,500. That gives us 81,500. If we look at it, 81,500 is bigger than 64,500, which means there is profit. If you remember, if the credit side is greater than the debit side in joint ventures account, it represents a profit. But if the credit side is greater than the debit side, debit side is greater than the credit side, that is a loss. So in that case, 81,500 naira is what will be written at the total side. So we have 81,500 naira, 81,500 naira. So now, if we look at the debit side, the total is 64,800. So we are going to subtract that from 81,500. If we subtract 64,800 from 81,500, it's going to give us 16,700. That 16,700 represents the amount of profit made from the joint operation, and this is the amount that will be shared among the venturers. So venturer share of profit, let's look at how their profit will be shared. So the amount of profit made is 16,700. If you remember, let's look at their profit sharing ratio. Profit or loss from the business is agreed to be shared 1:2. That is, profit sharing ratio is 1:2, which means if we add the total ratio together, 1 plus 2, that will be 3. That means Fadward is going to have 1/3, Fadnet will have 2/3 of the profit being made. So Fadward will be 1/3 times 16,700. That will give us 5,567. Fadnet will have 2/3 of 16,700, and that will give us 11,133. That is the share of profit. So we go back to our joint ventures account to add their various share of profit. So the total of the two, we can see it gives us 16,700. So share of profit, just like I said, since Fadward is the one preparing account, Fadward's share of profit goes to the profit and loss account. That's the reason why we say profit and loss account. That's for Fadward, 5,567. While Fadnet share of profit is how much? 11,133. Then we go back to Fadnet, 11,133. If we add the two together, that will give us 16,700. We can see that the two accounts now balanced. If we add 16,700 to other entries we have at the debit side, it's going to give us 81,500. So the Fadnet share of profit will now be transferred to its own account, that is the Fadnet account prepared by Fadward. So this Fadnet account, then we have joint operation share of profit. How much? 11,133. Since there is no any other entry again, we also close the Fadnet account. So let's close the account. So let's add all the entries at the credit side, since what we have at the debit side is 37,500. So 22,500 plus 800 plus 2,400 plus 3,000 plus 1,100 plus 11,133. That is going to give us 40,933. Compared to the amount we have at the debit side, we can see the credit side is bigger than the debit side. So that's the amount will be written at the both side. That is 40,033. Now, 37,500 compared to 40,000 now and 33. So we are going to subtract 37,500 from now 40,000 now and 33, and that will give us 3,433. That amount represents the amount of balance that will be paid to Fadnet as regards the joint venture. So this amount will be credited into the bank account. So that's the reason why the balance will be debited, bank bracket balance 3,433. So that is all about how to prepare a joint ventures account. So when the owner, when the book is not being separated, so which means each of the venturer will prepare joint ventures account and co-venture insurance account. So in this case, this is Fadwell preparing the account. If it is Fadnet that is preparing the account, the joint ventures account will be the same, while the co-venturers account that will be prepared will be Fadnet is going to prepare Fadwell account, which means all the entries of the Fadwell is what will be treated under that account. So just like I said, in the next lesson, we will be looking at the other side. Presently, what we treated here is when each venturer keeps complete record of his account. Just like I said, joint ventures account will be prepared, co-ventures account will be prepared. But a situation whereby each of the venturer keeps record of only his account. So that is what we call a memorandum method. That is, a joint ventures account only will be prepared, while a memorandum account will not be prepared to determine the profit or from the ventures. And that is the one I will be treating in my next video. So don't forget to like the video, subscribe to the channel, and share it with